very important event discussing the combination of billing systems, tax engines, and professional services, and what you really need to do if you are going to implement a new system, technology, having the right professional services addressing all of the onboarding needs that you need to do before you go live. As Jennifer mentioned, I'm Jonathan. I'm not only the managing partner of a law firm, the CommLaw Group, but I'm also the founder of the Compliance Group, which is a consulting firm that handles market entry matters and post-entry compliance services. So that would include tax reporting, corporate reporting, and regulatory reporting before the SEC and utility commissions. My experience in these dual roles gives me a certain perspective and insight into billing system and tax engine implementations, and how picking the right technology partners and professional service vendors can have a significant impact on the overall success of an implementation. As we'll discuss, software technology is oftentimes only as good as the software users make it. I'm specifically referring to the challenge of avoiding a garbage in, garbage out outcome. This challenge is most noticeable when it comes to the resulting tax and regulatory fee outputs that you ultimately achieve after implementing a technology system like a billing system combined with a tax engine. So going on to the next slide, just talk a little bit about the compliance challenge that confronts communication services providers in particular. Telecommunications is one of the most highly taxed and regulated industries in the US. In fact, telecom is right up there with gasoline, tobacco, and alcohol when it comes to taxation. It's not because telecom is a sin, it's just because telecom industry suffers from the legacy of the Ma Bell monopoly. Ma Bell was all over the country. State and local governments all throughout the US saw it as a rich source of revenue to pad their pockets and add revenue to state and local coffers. And unfortunately, as technology has evolved and competition has been introduced into the industry, the rules have not kept pace. In fact, most of them are on the books, they stay on the books, and it's very difficult to get them off of the books because telecommunications has been and continues to be a very rich source of revenue for state and local jurisdictions as well as the feds. Dealing with a nationwide patchwork of regulations and taxes is really cumbersome. A company that is offering services nationwide could have the potential of up to 48,000 tax returns, regulatory filings, certifications, and reports per legal entity per year. The tax base is huge. There are 300 or more different types of telecom taxes, fees, and surcharges. And because of the breadth and complexity of the compliance challenge, it's almost a necessity for any company operating in a multi-jurisdictional basis to implement a fairly robust billing system, a nimble billing system, also one that is tightly integrated with a tax calculation engine with the underlying tax content. So moving on to the next slide. This is where I'll hand it off to Emiliano to speak a little bit about J-billing and the billing and automation challenge that his company addresses.
Thank you, Jonathan. This is Emiliano Conde from J-billing. And thank you, everybody, for joining. Really, joining a webinar that is about taxes and billing, I have to give you some prize. People usually don't like to talk about billing, let alone talk about taxes. At least I don't like to talk about. But people they do like to talk about their businesses, and truly this is what we're set to do here with Jonathan. We are trying to remove all the complexity that the tax situation will have, and all the problems that basically getting a correct invoice out the door could bring you. So it's great that you guys have joined and you show interest in tackling these issues well. As far as J-billing goes, well, J-billing solves today's telco billing issues or tasks or requirements, and those are many because we have plans, bundles, subscriptions, usage, mediation to bring that usage into the billing system, provisioning, so we activate or deactivate services as needed. And we do all these things in a hosted environment. We can also deploy on-premise, but we find that there's a lot more value if our customers don't need to install software, have a database, have a DBA to take care of that database, have a sysadmin to keep all these systems secure, to be PCI compliant and stuff like that. Hosted plus all the billing functionality, that's great. But really, what we specialize is into giving telco companies what they need for future challenges, because this is an industry that truly has a lot of disruption going on, a lot of new services that you could provide, a lot of new services that customers expect or that they might be willing to buy if you were to provide them bundled with some other thing that someone else sells. So there's lots of innovation, lots of competition, lots of disruption, and what you need then it's your backend to respond to that. That backend often includes the billing system, and the billing system will need also to get the taxes well calculated and well presented, which is what is it that we're talking about in this webinar. So, Jonathan, tell us a little bit about the perspective you and your firm has about getting the configuration of those taxes well set up from the beginning.
Well, Emiliano, one of the biggest misperceptions I think that I often encounter with, in particular, companies that are new to telecommunications marketplace is just their lack of a full appreciation and understanding for the complexity, the scope, the breadth, all of the various issues that go into determining and calculating and then presenting accurate taxes and fees, particularly when they're applied to some new and novel services and services that may not fit neatly within a particular classification, tax classification or regulatory classification. And this is just not something that happens overnight. Making sure you implement a billing system, and in particular with respect to tying that billing system and the products that you sell and the services you sell to a tax engine takes a lot of planning. It takes time, and it takes some effort and some investment. So again, go on to the next slide and discuss why it's really important to take your time, pick the right vendor partners, and work with a professional services firm that can help you through all of the, and again, I will get to them in a minute, the 9 steps that we think are essential to an effective implementation. And by effective implementation, what I mean is that you are going to end up with taxation and regulatory fee assessment results that are neither going to expose the customers to too much taxes and fees on services where if you carefully think through the issues and implement it properly, you can reduce the exposure of certain revenue to taxes and fees. Again, if you assess too much in taxes to your customers, you're going to put your company into a non-competitive market position. Why is that? In today's competitive environment, businesses that are purchasing or consumers that are purchasing communication services are looking below the tax and fee line. They're looking at the total cost of service. And if your total cost of service is jacked up by 25, 35, 40% because you're over-assessing taxes and fees on the services, whereas your competitor has really taken the scalpel to their analysis, and they are billing out 15% average, even lower, you're going to be at a competitive disadvantage. Not only that, but if you over-collect taxes and do so in a way that you can't defend, your customers are entitled to refunds if they contact you and they say to you that you're assessing too much. On the other side of the coin, you have a situation where you fail to assess enough. If you don't assess enough taxes, you're not collecting enough, you might have potential out-of-pocket liability to governments across the country. The minute you get audited, that's when they're going to actually take a look under the hood, and they'll determine that things were not done right on the implementation because ultimately the output of the billing system and tax engine are producing results that are just inaccurate. And the last thing I'll mention, and I'll talk about this a little bit further, is you have to avoid those collateral impacts on your existing operations. So let's move on to the next slide, and I'll go through the 9 steps or the 9 issues, the areas that you really need to address when you are onboarding, implementing a billing system and tax engine. Collateral exposure review, product catalog development, just educating yourself on the basics, doing a Nexus analysis, tax situsing. I'll get into a lot of detail on the optimization and tax policy development. And then there's the software mapping, the tax mapping. There's integration, technical integration through APIs or otherwise. And then you have to do some invoice testing. And the last but not least, once you are live, you want to maintain compliance in good order. So moving on to the next slide, we'll get a little bit into the collateral exposure review. This is the first thing that I always recommend doing, especially for companies that have been in business for a while. Maybe they are companies that are selling handsets or phone systems. They're typically used to selling a product, a piece of good, something that they drop ship from their business location or their shipping location out to their customers. Well, the issue with a company like that is you can really narrow down where your company is exposed to not just sales taxes, but also income taxes. And you do this because of a thing called Nexus. If you then add communication services to your portfolio of offerings, and you start selling communication services all over the country, whether you do it through your own existing corporation or through a subsidiary, you have an issue because of the Nexus for one, Nexus for all concept. The threshold for establishing Nexus over communication services and service providers is much, much lower than the physical presence that's typically required of a company that is selling traditional goods and products. So again, you want to evaluate, you want to have lawyers or experienced consultants evaluate and advise you on the risks of adding communication services and methods to mitigate the exposure of your legacy business to sales and income tax exposure all across the country, just by virtue of adding even a modest component of communication services to your portfolio. So moving on to the next slide. This is a really, really important step in the process. And the product catalog is essentially your lifeblood. This is the heart of your business. It's everything that your company sells. And by maintaining a product catalog that is structured in such a way that allows for easy maintenance and updating and modification, but also the ability to have all of that necessary data in one place. And the data that I'm talking about are the tax policy decisions and the tax codes and the Situsing codes that are associated with the tax engine that you're mapping to. Developing a meticulous product catalog is really an essential part of the process. If you don't know what you're selling and you don't have it well documented and ease with which to translate that product catalog into the billing system, while also referencing back to some of the tax policy decisions that determined what tax code you used, be really stuck in a bad place. And I'll just have Emiliano talk a little bit about product catalog and how important that is to J-Billing.
Thank you, Jonathan. Right, the product catalog for a billing engine, imagine it's a very central part of the configuration so that billing engine can do the job well. In fact, we believe that the product catalog should be the source of truth should be the billing system. Because sometimes you get product catalog sprinkled across CRM or some other systems. Even sometimes I've seen it in accounting systems. But you see, you have a product catalog that translates also to not just the description, but also the pricing. But that product catalog has to be analyzed not just from a business point of view, meaning we sell a bundle with 1,000 minutes of voice, but also from a tax point of view, because we might need a product catalog to be split in ways where we are able to then configure the tax implications of a particular service or product correctly. So at times you might have a product that you started simple and you started small and you were selling this product in a jurisdiction. Say it was a bundle of voice plus and also voicemail and maybe other services and products all attached to the same bundle. But as you maybe run this in a different jurisdiction, you might need to reconsider the uh, how are you selling this? Maybe it's different items, different products, and then all in a bundle, but you might have to report them separately so you are able to avoid getting one product getting taxed as if it was the other product, because not both things get taxed the same way.
I think, Emiliano, taking a look at the sample template product catalog gives the audience a little bit of an idea of what we're talking about in terms of the types of information and the structure that you'd want to have a well-maintained product catalog in. And if you look along, it's tough to see, but if you look along the bottom, you'll see that we've segregated out into distinct product types. So hardware sales are treated different than leases under tax laws. Bundled services are unique, and they have a lot of unique areas that you can work on your tax policies. And again, when I refer to that, I'm really talking about how you're allocating revenue between various jurisdictions, how you're going to Citus revenue for instance, if you have a state-to-state circuit, are you going to source revenue to both locations 100%? Are you going to do 50-50? So all those determinations can be captured in a well-developed product catalog. So again, moving on to the next slide. This is another area that, again, it would seem fundamental, right? You need to understand the marketplace you're entering into. Telecommunications is one of the most complex industries currently on the planet. And part of the reason for that is exactly what I discussed earlier, the fact that you have jurisdictions all across the United States and Canada that have taxes that apply to different types of services for different reasons. I'm trying to decipher what taxes apply on a jurisdiction by jurisdiction basis is next to impossible, and that's why companies like SureTax and their parent Wolters Kluwer and CCH division do the tax research for companies, even firms like us. They do all the hard work and research into taxes. But again, determining how your product fits into those taxes and fees, that's on you. And with services morphing every day, new technologies coming out, and the FCC and state utility commissions having a very hard time at least being transparent in how they are going to subject certain services to regulatory fees and taxes, you have to educate yourself about the environment you're entering into. Next slide. One of the other things you have to do, and I put this at number 4, is doing a Nexus analysis. And as I mentioned earlier, the issue with Nexus is under the Constitution, the Due Process Clause, and Supreme Court precedent interpreting the Constitution, states don't have jurisdiction to tax you if you're an out-of-state company if you don't have sufficient nexus. And nexus is essentially a physical presence in the state. When you talk about selling traditional products and goods, or sales forces, you have boots on the ground in a particular state, you have offices and plant in a state, or frequent visits to a state, there's a true physicality there. The threshold for state and local jurisdictions and how they have determined Nexus being applicable to communication services is a much, much lower threshold. In essence, it boils down to whether or not you have a customer with a service address in the state where you are providing services and deriving revenue from that customer, and you are utilizing some type of physical plant within the state. And there's a City of Baltimore case versus Vonage where that threshold for physicality for an over-the-top service provider is so low that the the city essentially reasoned that if you're using a third-party ISP's line in order to connect to a customer to derive revenue, that's all it takes. They have Nexus, you have Nexus, and they have jurisdiction over you, and that was upheld by the court. So generally speaking today, most communication service providers will default to a position where Nexus exists as long as you are providing service to a customer in a state. Moving on to the next, I'll call it a best practice or step in the process, tax situsing. This is another issue that you're going to have to address. Now, one of the great things about software like a JBilling is they're going to be adaptable to whatever data you can bring to the table. So determining how to situs revenue or source revenue for taxation purposes can be complex. A lot of it depends on what information you have about your customer and the services that you're providing to your customer. And I'll just turn it over to Emiliano to discuss a little bit about the flexibility of JBilling and its ability to essentially take any data that you have, whether it's zip, zip+4. So Emiliano, if you want to talk a little bit about that.
Thank you, Jonathan. Right, you know, for taxes, the actual address it becomes very important. So, of course, the product and what kind of product, how that is cataloged or interpreted by the taxman, that's very important. But the address of the consumer or who is buying this will matter a lot. And when it comes to JBilling, one of our philosophies for building billing software is that we do not make any assumptions. So we don't make assumptions of how is it that the customer will receive that invoice. Is a customer might have more than one address. It might have 10 addresses for all we know. One might be the address where you ship the product or you deliver the service or you deliver the invoice or even the address as far as how is it that this customer has to be taxed. So, and even the composition of that address might be quite different because you see, if we are selling to an enterprise, we don't need the first name and last name. But if we sell to a residential, we do not need the company name. So all these data, how much data and how that data is structured is something that you configure in JBilling. You don't need to make reality match JBilling. Is the other way around. And I think that is pretty good when it comes to calculating taxes.
And I'll take it over here, Emiliano. This is perhaps the single most important best practice that I could recommend to any of our clients, because when you engage in a tax and regulatory fee optimization analysis and you arrive at results and decisions that are well documented in what we'll refer to as a internal tax assessment and remittance policy, you're going to go through the process of being exposed to and then documenting all of the important issues that you have to cross over in order to ensure that your product and service catalog is capable of being mapped, having the right allocations, allocating revenue from telecom to non-telecom, non-regulated or information service, allocating for jurisdictional purposes. Again, a lot of people are probably familiar with the FCC safe harbor for voice over IP services. So again, doing the optimization is where we would go through your products, gather up all the facts, apply those facts against the existing laws and regulations, as well as taking into consideration trends. So what's the trend line going towards? Collaboration services and UCaaS services are on one of those thin lines at this point in time. Is it considered software? Or if it has some type of audio bridging component that can be separated out, is that a telecommunication service? Is it interconnected voice over IP? So again, there are a lot of issues that you have to essentially determine the appropriate regulatory and or tax classification of the service. Those are not oftentimes black and white determinations. What we would do during the course of an optimization analysis and helping you to develop a tax policy is to review any of those services that are not black and white. We're not going to spend time telling you how to treat a T1 circuit or a basic local line. We focus our efforts on advising you on some of the riskier areas, the areas that have a lot of gray area, and we're going to give you those options. We'll say there's an aggressive approach to take, there's a conservative approach to take, and there might be something that we can split the middle, and that essentially allows you to balance your risks. So when you then implement that product and service catalog through the billing platform and the tax calculation engine, you may not be getting perfect tax results, but you're not going to under-collect and you're not going to over-collect. You're going to balance that risk on the areas of services where there is no black and white answer, where you have to make a judgment call. And again, by maintaining a well-documented product catalog and having that internal tax policy document, that allows you to keep up with the changes. So if there is an announced change in a regulation, something becomes clearer, it becomes crystallized, and we no longer have to choose between aggressive or conservative and pick some middle-of-the-road approach. You have at your fingertips the ability to identify each and every product that was impacted by that determination, and you can modify your approach going forward, and you could do it more rapidly. Again, anytime you're dealing with taxes, every day that goes by, you're compounding either a good thing or you're compounding a bad thing. You're compounding a bad decision that continues to add up. You're either collecting too much or, again, you're collecting too little. So having a very well-developed tax policy, having it reflected in your product catalog, two very essential steps in the process. So let's move on to where the rubber meets the road. That's tax mapping. Our advice, don't trust amateurs when it comes to mapping. One thing, I'll just speak from personal experience. When we have gone out and tried to find professionals who do tax mapping, they don't exist. They're very rare. So having people that understand not just the regulations, the tax laws and regulations, but also the software that we're working with, it's critical. Emiliano, you have a few things to talk about on tax mapping as well?
Yes, indeed. That totally agree with you. Do not trust amateurs. I probably would consider myself worse than an amateur when it comes to realizing what kind of taxes someone will have to pay. But then that's where the experts come in. The important thing that I want to point out is that the billing engine needs to be able to capture all that configuration of how each product needs to be treated, how the addresses of customers need to be taken into the whole account, and then it simply takes that information and sends that information to the tax engine. Is as if we take the configuration of those products and that gives us some kind of formula, but it's the tax engine that will be able to know the rates that apply for those taxes at that specific time for that specific customer in that jurisdiction. You see, so the billing engine is almost like a messenger when it comes to taxes, but it needs to be a faithful messenger and take the right configuration and send that, and then that will resolve the taxes. So it's very important to get the configuration right. Otherwise, the tax engine cannot make up for any misconfiguration. Right? It's more like a very very sophisticated calculator, but if you punch in the wrong numbers, the result will be wrong. And well, when it comes to tax engines, there's a few we have integrated with, but we'll talk about that in a minute. I think that it's important here to take a quick look to, a little bit of an example of what is it that we do. Jonathan, you showed us that spreadsheet as an example where this is the configuration. This is where you give your customer the necessary configuration so that product catalog is properly configured. Now, we need to map that configuration into JBilling, which means that we need to create meta fields, and that is done through configuration. You don't need to write any code. So we have, for example, a mapping description or a transaction type code for taxes, and our products then get, we can call it like decorated with that additional metadata. So then the tax engine can properly calculate those taxes. Jonathan, would you like to add something else to into the mapping, or should I move on?
No, I think we can move on to the technical integration element of a typical implementation, and that's one more slide forward. And we can be very quick about this. As Emiliano was saying, we're talking about taking a spreadsheet, mapping it to another spreadsheet that's part of one software database, the billing platform, that also then maps to the spreadsheet of a tax engine. But the two systems, the two software systems, have to talk to one another, and that comes down to the API development. We're happy to have this particular webinar sponsored in part by CCH SureTax, which runs one of the more robust tax calculation engines out there. And the great thing is that I think JBilling and SureTax already have an API. What we can run into with clients that don't have an existing API, homegrown billing systems, for example, is that it's difficult for those systems to communicate with the tax engine. So there could be a step in the process of a billing system tax engine integration where you have to actually create the API. And that really does come down to some technologists from both the service provider as well as the tax engine provider. So we can move right on to the last step, recommended step in sort of the implementation process, which is testing your invoices and making sure that the presentment of those invoices is as expected. So once again, you can do all the work in the world to make sure that you're mapping correctly and that you've optimized your products and services and you have a good catalog. But if you go to market without testing, you're missing a very important step in the process. No software is perfect. Oftentimes you'll find that whether it's a SureTax or a Vertex or Avalara, any database that provides you with the tax content, not all of the decisions that have been made are necessarily the right decisions for your business. Some decisions, some systems will default to some more conservative positions. Well, if you're a more aggressive company and you want to take more aggressive positions on certain services and how they might be taxed or subject to regulatory fees, you're going to have to do a little bit of testing and potentially go back to the drawing board and do some overrides. That oftentimes is an unavoidable step in the process. If you don't go through the invoice testing process and you go live, you could potentially go to market with some results that simply do not match your expectations.
And Jonathan,
we can move on. Go ahead, Emiliano.
Yeah, I think the last place we want to find out if our taxes are properly calculated is either because the customer finds out or because the authorities are unhappy or the auditor is pointing out that your calculations were wrong. I think that there is an important feature in JBilling, which is a test billing run, which really helps because you run a billing cycle and generate invoices, but those invoices are really not really applicable to the customer. Are just tests, so they don't change the customer balance. They are not actually sent to the customer via email or any other notification method. But you can see the total because all the steps for calculation of the invoice are there, all the steps for presentation of the invoice are there, and you can quickly test that invoice. So testing is important. JBilling makes it easy for you, And I think, Jonathan, you are right on when you say this is a very important step to get the taxes right. And talking about presentation and invoices in general, well, your invoices are very important, right? Because this is when you tell the customer that the customer should pay you some money, and this is something that at times is one of the few touch points that you have with your customer. So first, it has to be accurate. Otherwise, we are in trouble. And by accurate means that the totals are correct, that the taxes are correct. It's very common, unfortunately, that the invoices are not actually correct, and that leads to lots of problems. But even if, when they are accurate, they need to be well understood, because you see, if I bought a product or a service that it was sold to me as $100 per month, and then the invoice comes along and it's 110, I won't like that, and I might call back to the call center, which already costs money, about $10 a call, and or I might not pay it until I figure out what's going on. When maybe it's just that there's $10 of that is just taxes. If I had an invoice that was clearly telling me $100 is the product that you bought, $10 is the tax, therefore you need to pay $110, that probably would help to avoid the problem. As well, the invoice has to communicate value, because you might have something that differentiates your company from other companies. You might want to highlight that. You might want to promote other products or services that you think this customer might be able or might be interested in buying. And all that you can do with your invoice, because as I said earlier, an invoice is a regular touch point. That's something that people usually do read, and they might find things that otherwise you won't be able to communicate to them. So, Jonathan, we got the invoice correctly calculated. Everything is great. We did our homework from the beginning. Are we ever done? Are we done with our tax journey?
Well, you're done. You can go live. You've tested your invoices. You feel confident in the results matching your expectations. But now you go live, and now you start billing your customers taxes and fees, and you're the collector. Well, the taxes and fees that you collect, that's not your money. That's the government's, and you're just holding on to it. You have to get that money into the appropriate governmental jurisdiction's hands. And again, depending on how your company operates and where its customers are, you might find yourself having to file tax returns all over the country. 911 fees have to be remitted to 911 administrators and PSAPs all over the country. Regulatory fees at the state level being filed with the utility commissions. And again, the departments of revenue at the state level, as well as literally thousands and thousands of local jurisdictions. So it's critical once you enter the market that you have something in place to ensure that you can maintain your ongoing compliance so that you don't get yourself in trouble. Again, in an extreme example, holding on to tax money that you've collected from a customer and not remitting it to the appropriate jurisdiction could actually land you in jail. It's considered tax fraud. So again, you're essentially working for the tax collector. You have to essentially determine whether or not you can accommodate, meaning you can staff the volume of filings that you have internally, something that I wouldn't recommend in particular to a new entrant or to a company that's brand new to communication services. Or you really have to go out there and explore your options for outsourcing your compliance reporting to firms like the Compliance Group, which can do all under one roof services, not just handling your tax compliance with the departments of revenue and local authorities, 911, utility commission fees, and so forth. But it's also a tremendous way to keep in touch with all of the changes that are going on with the regulations and tax rules so that you're keeping up through that ongoing education, that relationship that you develop with a consultant that's assigned to your account. So again, maintaining compliance is quite an essential part of the process, and You're never done once you enter into the services market, so it's something to keep in mind. Emiliano, you want to close out? We might be having a little bit of difficulty with Emiliano, so I'm just going to go ahead and if we move on to the next slide.
Oh, I was on mute.
Oh, that's okay. Sorry, Emiliano. I thought there might have been an issue.
Yeah,
you're off mute now, so if you wanted to go ahead and wrap up.
Sure, I'll do that. So what we do at JBilling, the bottom line is that through our billing engine, we aim to increase revenue by allowing companies to launch new products, to bundle products that are compatible from third parties, and at the same time lower cost and lower risk, because when you need less people to run your billing system, when you run a billing system on a hosted environment, so you don't need to worry about security and PCI compliance and that type of thing, well, you can trust on our domain expertise. You can trust that we can take the right configuration from experts like Jonathan's team, and we would use then a tax engine to get those taxes properly calculated, and we are going to get the invoice to be well presented, well delivered, so you can have the highest payout ratio. So that's what we do at JBilling. And Jonathan, how about you tell us as a finishing line about the CommLaw Group?
Yeah, I'll go ahead and wrap up, and hopefully we have some time for some questions from the audience. But I just wanted to talk very briefly about the real unique value that you can attain through retaining both a legal services firm that specializes in serving all of the needs of communication service providers, also with the added benefit of a consulting firm that also focuses on very specific types of services provided to communication service providers. We have the unique ability at our organization to put a quarterback in charge of a system integration. So from the moment you start conceiving of the need to either transition from one billing system and tax engine to another, or to implement it for the first time, it's critical to have somebody who's been through the process start to finish, who can work with you throughout the process and really pinpoint and identify those essential needs for your company. Larger organizations with larger exposures are going to require more time, more effort, and we're going to have to look into more issues to ensure that your results are what you expect, and that they fit within your risk profile. Again, the bigger you are, as I said earlier, when you bill out the wrong tax and fee, it compounds itself over the course of time. And oftentimes these issues do not turn up until you get audited or investigated. For smaller companies, again, we can pick the right things that you need, the essentials, and then just educate you, make you aware of those issues, that as your company grows in the marketplace, you can begin to reinvest some of that money in the future into addressing some of those issues in the past to really tighten up your compliance profile, reduce your risk exposure, and take actions to mitigate those risks. So again, that's the unique value that our organization can offer to clients. And with that, I think I'll turn it over to Jennifer and see if we've got any audience questions for myself or for Emiliano.
We do, as a matter of fact. So our first question is, you had stated you need to evaluate if offering telco and VoIP services through newly created business could minimize tax exposure to legacy operations. Can you give some examples of the exposure differences?
The exposure differences, okay. Disclaiming that I'm providing any legal advice, and for that purpose I will put on a consultant's hat and take off my attorney's hat, and also remind everybody that not to rely on this webinar as legal advice. But just one quick example, something that we've been through a number of times for clients that, again, have entered the market, but prior to doing so, they had a legacy operation, and they were selling, for all intents and purposes, widgets. Again, let's use the example of maybe a systems integrator or some company that was selling handsets and phone systems, but not the services. They're located in Texas, but they have customers with offices all over the U.S. But they never send any salespeople anywhere. They don't have executives traveling frequently to any other states. They're staying home in Texas, and they essentially get an order and they drop ship that on a common carrier, UPS, FedEx. It gets to the customer location. They self-install. A company like that is only going to have tax exposure in Texas, whether it's income tax, state income tax, or sales tax. Now imagine that same company, it has $100 million of revenue from its legacy business. All of a sudden says, you know what, we want to get into SIP trunking. We want to start selling UCaaS solutions through a SIP trunk to all of our customers and all of their locations throughout the United States where we're shipping these handsets. Well, the second you start selling a communication service, even voice over IP, to a customer outside of Texas, now you've established Nexus in that jurisdiction for tax purposes. And here's the real issue. You haven't just established Nexus for communications tax purposes, which is going to require you to register with the Secretary of State and the Department of Revenue. You've also established Nexus for that legacy company. And the issue there is how do you minimize that exposure? Again, I want to avoid getting into a situation where anybody takes a scenario and runs with it without seeking consultation, because it is a very tricky and delicate matter. You're never going to completely avoid Nexus for one, Nexus for all. The only way you could avoid that is really setting up a structurally separate corporate enterprise to do the telecommunication services and ensure that the ownership of that separate corporation is sufficiently distinct from the legacy corporation. That's about the only way you're going to really have protection against the Nexus for one, Nexus for all implicating the legacy business. But what you could do is you can minimize that risk. And one way to minimize the risk is, again, a separate corporation, but it can be a subsidiary and affiliate. What you can do with that company is change the name. You register with a corporation where you now have Nexus for communication services purposes, but you're not necessarily on the radar immediately for your legacy business. So the connection between the two is distant. Is that going to protect you forever? Absolutely not. Is it going to buy you the time that you might want to have to grow your communication services business? Absolutely. That's the type of strategy that you can conceive of and implement so that you can minimize and mitigate the potential exposures to a legacy business as you try your hand at the communication services business. And then evaluate those risks going forward and address them to mitigate them even further, or to bring that legacy company into compliance in those jurisdictions where you now have a more significant degree of exposure. So again, that is just one of the potential strategies that can be deployed in that situation. And it's something that you want to think about right at the beginning, before you even start talking about what services you're going to sell.
Perfect, Jonathan. Thank you so much. We have a few other questions coming here. I believe this one is for Emiliano. Which tax engines work with the billing engine, JBilling?
Okay, thank you. So for us, integrating with a tax engine means writing a plugin. So we don't need to change the core of the billing system. It's a plugin that we need to develop. And we have a few. We have SureTax, which I would say is our preferred tax engine. We also have one with Avalara. We have another one with BuildSoft. So those are, plug and play. Basically, you don't need to write a single line of code to get to use those tax engines. But again, we can write new plugins if there were some other tax engines that would justify that. And in some other jurisdictions, you don't need a tax engine when you are operating, say, in Canada or in many European countries, because the taxes are much more simple, and just you use a different plugin that doesn't talk to a tax engine. You simply configure that plugin with some concurrent rates, and off you go.
Thanks, Emiliano. We have another question. So maybe for Jonathan and Emiliano, which steps in this best practice are most typically overlooked?
Jonathan, you probably want to take it.
Yeah, all of them. To be honest with you, if companies aren't aware that that there is a process involved, that software doesn't automatically somehow magically talk to one another. If you're learning for the first time that you have a number of steps that you need to go through before you can have not just software talking to one another, but also communicating information in an accurate way. And I hate to use the word accurate because that's in the eye of the beholder. I would say that one of the most important things that's overlooked is developing your tax policy, knowing why you're going to treat your VoIP service as 64.9% subject to interstate regulatory charges like the Universal Service Fund. Why are you going to use 64.9% safe harbor when you could potentially use call detail records or other books and records to reduce that exposure significantly? Wouldn't it be better to expose 20% of $100 of VoIP revenue to the 18% Universal Service Fund fee than it would be to expose $65? That's certainly beneficial to your customer. It's better to competitively position your company against others that are out there in the marketplace using the safe harbor. But you have to understand the options. You have to weigh the evidence that your company is able to produce to defend your use of a books and records approach to revenue allocation for VoIP services. And all of those things require knowledge and effort. If you don't know it, then you're going to miss the opportunity. You're going to do things that are simply incorrect. So again, developing that tax policy and going through an optimization exercise with each of the products that really lends itself, and I refer to those products as the newer solutions and services, the ones that don't fall into a black and white category like services would. But again, documenting after you've undertaken the analysis and making decisions. That's where you take your management's and your company's particular circumstance. Whether it is you don't have a whole lot of money to devote to this, then you might default to an approach that is a little bit simpler and more streamlined, less risky. You don't have as much to defend, but ultimately you're likely going to expose your customers to more fees. You're a larger company, you have the resources, you know that competitively you're going to be harmed. You devote those resources to developing policies that are consistent with your size, your risk tolerances, and so forth. So I would say that of all of them, that's one of the biggest. It's one of the key elements that goes into the creation of a product catalog that can easily be mapped into a tax engine.
Thank you, Jonathan. What I would briefly say, just to talk about this same topic, is that the most common thing is to underestimate, because we are asked, well, does your billing system solve all my tax problems or tax challenges? Well, it's part of it, and it does a good job, but it does need the right configuration. We are not experts on taxes, and also you do need a tax engine that would as well do the right calculations given that configuration. So just simple underestimation, it would be the most common thing. And Jennifer, what else do we have?
Well, we do have a few more questions, but unfortunately we're out of time. So we're going to get back to those participants with questions over email. And we also have a specific question from Gino with regarding to when the recorded webinar will be available. So next week we'll be emailing you all with a link to the recorded webinar. And we really appreciate all of your participation. We look forward to hearing more questions from you. Both CommLaw Group as well as Jay Billing are always here to speak with you about any of your needs. And we thank you once again for your time this afternoon.
Thank you, Jonathan.
Thank you, everybody. Thank you.
Bye.